thinking of selling your business? Here's what you need to know before you exit. Now let's look at corporate ownership. Where your shares in the trading business are held by a holding company, it's the holding company that's going to be selling the shares, not you personally. And the tax treatment is completely different. If the conditions are met, then the gain could be completely exempt from corporation tax under the Substantial Shareholding Exemption. That means if the holding company sells the business for, say, £5 million, the full £5 million can be received tax-free in the holding company. Now that does mean that if you take the cash out of the holding company, you'd be paying tax. But if you'd be reinvesting this, for example, into property, then this could be much more tax efficient for you. The conditions for SSE are broadly that the holding company must have owned at least 10% of the trading company's shares for a continuous period of 12 months within the 6 years prior to disposal. And again, the company being sold must be a trading company. For business owners who aren't looking to take the full proceeds out straight away, this structure offers a lot of flexibility. You can defer the personal tax charge, reinvest the funds at the corporate level, or build a longer-term plan for drawing out the value tax efficiently. You could even look at a family investment company planning, alphabet shares, or even trusts, all of which will become more viable when you've got a big lump sum sitting in the corporate entity. But what if you want the cash personally? It's a common question. And well, the answer is it depends. If you own the company personally and sell it personally, the funds come to you immediately. You do pay the tax, but you get the benefit of having all of that cash available to use. If you sell it through a holding company and you want access to the funds, you'll then be taxed as you take the money out through dividends or salary. So it's not always about paying less tax. It's about controlling when the tax is triggered and seeing what's best for you and your circumstances. And if you don't need the full proceeds personally, and say you want to reinvest or support family or do some legacy planning, having the cash in a holding company gives you more options to work with. As always, if you have any questions, comments, or any topics that you want me to talk about next, drop them in the comment section below. That's it for this video. Thanks for watching.